This video is going to be a template for you to work on where to put your stops and to experiment with that, as well as ways that you can move your stops around and trail them. Personally, look for two things when setting my stop loss, depending on where we are at, right? So if I'm taking this 1 minute fair value gap, I can use the high of the candle that made the fair value gap, or you can use the short-term high as well. Same thing for getting long. If you got long in here, right, this order block, you can use the low of this candle or put it below the short term. Let's look at this price action, right? And this fits in with the model. You have a higher time frame point of interest, liquidity, or fair value gap that you enter into. Then you break structure down. So that's your break in structure or market structure shift. And then you want some sort of imbalance in a premium up here to get short. Now, if you enter here, what are your options for stop placement? Personally, I like to use the candlestick that made the fair value gap, but you can also use the high. I switch them out depending on my risk tolerance for that certain play and what I think is happening. Now, the question you guys are probably getting to is, when do you trail your stop? And for me, that is after I normally take my first partial and we break structure. So if you enter in here, you're going to want to only move your stop once structure is broken. You can move your stop down to the entry point or this short-term high, as it should be protected. Then a new short-term high is put in. Once this breaks this structure here, you should be able to move your stop there. And you keep going, right? So after this displacement is broken again, you can move your stop here. I mean, right down here, obviously that's quite the drop. You can take partials and stuff, but this structure is broken. Move your stop here. And this structure is never broken, so you could take this short-term high once it starts to shift structure. So let's move this and I'll show you a real example. So as you can see right there, that is our real example. And you can see how you could trail your stops on the 5-minute chart. Now what you can do is go down to the 1-minute chart and you can trail it a little bit tighter if you want. Just make sure you get a shift in structure before you move your stop. So going over a few examples, we ran this liquidity here and then we shifted structure. So we want to look for a setup in there. And on the 1-minute chart, there is a fair value gap here, which if you look into the displacement range, right, high to low, that is in a discount and an optimal trade entry. So you would look for that. Now, where do you put your stop? Well, you have two options, like I said. You can use the high of the candle that made it, or you can also use the short-term high. That is up to you. It depends if there's imbalances above it, other things like that. Another example here, let's say you were playing this break a structure up here, as well as it breaking the structure up here. And you look for a retracement into a fair value gap at a discount, which would be right there, right? So you have that little 2-minute fair value gap, or that would be around a 5-minute fair value gap as well. Looking for something in there. Where would you put your stop? Well, on this one, you could either use this low or one of these candles below this order block. I would personally use this low. Now, where would you trail your stop to? Once this structure is broken up here, move my stop here. This structure right here is broken, so move my stop up to here. This structure is broken here, move my stop up to there, right? This structure is broken right here, so you could move your stop up to there, and then you get stopped out there. So pretty effective way to trail your stops. I hope this video was helpful. Try to make it short and sweet. So if you enjoy that, please consider subscribing. Thank you.